Just like other forms of technical analysis, such as chart patterns, Fib techniques can still generally be used after a stock's price has been split multiple times. In this case, a Fib retracement identifies some possible swing points to use for points 1 and 3 of a Fib extension. Recall from the diagrams that the base trend affects the distance between the Fib levels, while point 3 determines how high the entire Fib extension is positioned, with all its Fib levels. Point 3 will match the 0 Fib level. However, points 1 and 2 will vary depending on which swing points are used to define the base trend. That is why it is not uncommon to see point 2 not match an exact Fib level. In this case, point 2 is at 71.55, which is close but not an exact match to the 0.5 Fib level at 71.66. All this is just a reminder that Fib extension levels generally have less potential for their levels to be validated compared to Fib retracements. A mistake like moving point 3 to a point slightly higher from the absolute low of the retracement has a marginal effect. However, this should be avoided, especially since the entire Fib extension can be drastically altered if point 3 moves further away from the absolute low of the retracement. A gap up closing on the 1.618 level doesn't get filled, and the chart proceeds to reach new record highs. To demonstrate an aggressive trend can still surpass a major extension level near previous record highs. Certain levels, such as the default 1.618 and additional 2 level, are among the most famous Fib extension levels. A lot of significant price action can often take place at those proportions. However, the use of a Fib level or levels is a matter of personal preference. Significant price action can certainly take place at other Fib levels and is highly variable depending on the broader context of the chart and developing short-term conditions. Certain Fib levels can be preferred, but it is not an absolute guarantee a trend will pause or completely reverse because the chart contacts a certain Fib level. As seen in the diagrams before, a larger base trend can significantly widen the distance between Fib levels, which can often result in lowered precision. It is similar to how larger Fib retracements can generally approximate more significant swing points, but tend to be less precise and miss the swing points of smaller scale retracements. The effects of a larger base trend are even more significant when its retracement is also larger. On this chart, it was a mistake to place point 3 at the upswing low of the large gap down candle. It would be more correct to place it at the next upswing point, slightly lower. However, as seen later, there was only a minor distance between the two upswings, which resulted in a minimal impact on the extension proportions. A trend line drawn with price action within the range of the base trend can help identify when certain extension levels could present greater opposition. This chart has a stable but fairly imprecise uptrend. However, this is quite a good result considering trend lines are more difficult or impossible to draw to intersect with extension levels, because the trend will often steepen after point 3. Trend lines are supplementary and not a primary form of analysis, since they have reduced effectiveness in the context of Fib extensions. multiple trend line variations can help, but the result on the chart is a less common successful result of a trend line within the base trend range precisely intersecting with multiple fib extension levels.